Good morning, everybody, and welcome to our webinar on the failure to prevent fraud, offence and its impact on the public sector. My name's Karen Murray, and I head our public and social sector team here at Forvis Mazars in the UK, and I'm also an audit partner. Before we start, I'm just going to run through a few housekeeping issues. We'd like this to be an interactive session, and we're proposing to hold a question and answer session at the end. Please feel free to ask any questions you want, but please pop them in the chat box as we're going along. If you've joined us by Zoom, please use the question and answer box to post any of your questions. But if you've joined us by LinkedIn Live, please put your questions in the comments box and we'll pick them up as we go along and answer them at the end. We are recording this session and the recording will be made available to you at the end on our website or by email. Please feel free to share it with any of your colleagues. The failure to prevent fraud is a significant piece of legislation aimed at holding organisations accountable for preventing fraud in their operations. The offence places a legal obligation on organisations to implement effective measures to deter fraudulent activity. So today we'll discuss what that legislation entails, its implications for public sector bodies and those in the subsectors, and we'll provide some practical guidance on compliance and proactive steps that your organisations can take to mitigate the risk of fraud and to be prepared. I'm joined today by a panel of experts, Katie Archer, an Associate Director in our Forensics team, and Peter Morgan, a Manager in our Forensics team. We've also got with us Matthew Garbett, who's a partner at Devonshires, and his colleague Rachel Ogill-Smith, also a partner at Devonshires. We do want this session to be as helpful and informative and engaging as possible, so please do let us have your thoughts and your questions as we're going along. I'm going to hand over now to our first expert, which is Matthew, who will give you an overview of the failure to prevent fraud offence and its implications. Matthew, over to you.
Thank you, Karen, and good morning, everyone. Thank you for joining us. I'm conscious that we're still waiting for some people to join, but as Karen says, this is being recorded, and I hope everyone finds this really useful, whether you're watching it live or in the future. We're going to go over at the start just a coverage of the legislation, which I appreciate a lot of people will already be aware of, but it's important we know what we're talking about when we're talking about the failure to prevent fraud offence, because there are some misunderstandings about it. So let's quickly dive into the legislation. Where does it come from? This comes from the Economic Crime and Corporate Transparency Act, or ECTA 2023. Now, it's set out in particular sections 199 to 206. Don't worry, we're not going to be boring you with the detail of it as written, but it is important that we understand who it affects and how it really works. ECTA in itself is actually a much wider piece of legislation. It deals with a number of other issues like transparency, enhanced companies' house powers, a bit of changes to the crypto assets, criminal activity confiscation and civil recovery regime under POCA. It adds additional powers to the SFO for investigation, which is obviously crucial for what the SFO does year in, year out, and following its business plan in the coming years. It also provides for a register of overseas entities. And another closely related change to what happens with the failure to prevent fraud offence is it also changes the traditional rules for attributing senior managers' criminal conduct in economic crimes to the business. And so there is a provision that provides that if a senior manager of a business acting within their actual or apparent scope of authority commits economic crime offence, fraud, bribery, and so forth, then that organisation is also guilty. That changes the common law. So a really substantial thing. But what we're really talking about today is that failure to prevent fraud offence. Now, the best way of looking at it is, as in the centre of this slide, the offence arises when employee, agent, subsidiary, or associated person of an organisation commits a fraud that is intended to benefit that organisation or its clients. Now, I find this a key point, really, because it's not always understood. This isn't a traditional failure to prevent any kind of fraud occurring. It is where there is a intention to benefit the organisation or its clients. And that takes it outside the scope of what a lot of people actually look at when they're looking for fraud within their organisations. It's insider fraud to the extent that it is an associated person. What does an associated person mean? Well, that is going to be an unknown quantity to a degree when the legislation comes into effect on September 1st. But it's certainly going to include those who are closest to the business. It's obviously going to include directors. It's obviously going to include senior staff, junior staff, employees as a whole. But it's also going to include potentially those who have a looser relationship with the business, an agent, a subsidiary. It's going to be important that you understand who are your agents. Do you really understand when you've got a contractual arrangement, whether there is an agency arrangement that has inadvertently arisen? It's very important that you look when you're looking to prevent fraud and put in place protections that you are looking at who may actually be counted as an associated person. Franchises typically won't be captured, or suppliers, but that's not going to be the case for all suppliers who have a very close relationship in some circumstances. It's not going to include, fortunately, legal advisors or accountancy and so forth. Professional services is not going to be part of it because they are going to be acting very separately, but not actually an associated person, albeit they may feel very close to you. And it's important to understand here that this is not about directors being directly involved at all in these frauds. It is those associated persons, those employees, agents, subsidiaries, or associated persons being those who are involved. And there is an exclusion here as well, of course, that the organisation is not guilty if it was or is intended to be a victim of the fraud offence. So again, this is not usual fraud as we usually talk about it when we're talking about how to prevent fraud occurring to a business. This is about preventing fraud taking place to benefit a client or the business. Now, we'll deal in a little bit more detail on the next slide in terms of what those benefits can be. But firstly, does it apply to your organisation? Now, I suspect that everyone on this call probably has a good idea as to whether it does already, but let's look at this. It's large organizations, and that is defined as having two or more of the following criteria. There's 250 employees, £36 million turnover, or assets exceeding 18 million. Now, of course, businesses that might be around the cusp of this need to be very aware of how they may one year be liable to commit this offence and may not the next, or vice versa. So that will change, and that's reflected in the legislation, how it's written. But the important thing here, again, something which does not always get picked up, is that it is group entities that can be aggregated to actually produce an overall aggregated size, which puts the organisation as a whole into a large organisation category. You need to include the subsidiaries, and that's reflected in sections 201, 202. And in general terms, when we're talking about organisations, it's covering companies, limited liability partnerships, the whole gamut. And then what are we actually talking about when we're talking about an offence? So what is this riding on? What is the failure to prevent fraud offence actually riding on? It rides on an underlying fraud offence, and those are specifically set out in the Act. So there's no guessing here as to what's included. They're simply listed in a schedule. Schedule 13, I think it is, as it happens. But here it is. It's typical offences from the Theft Act, typical sort of fraud offences that you would look at if you were doing prosecution, or looking at what actions you can take or what you might be someone might be defending. Fraud Acts 2006, false representation, failure to disclose information, abuse of position. You can immediately perhaps see the flavour of these, of how, if you don't have in place proper understanding of what those within your business and associated to your business are doing, you can see how those frauds, failure to disclose information, abuse of position, may all start cropping up. So it's pretty clear here. There's always, it's always uncertainty if you don't have a list of offences. Here we do, very simple. Important to remember, it also includes aiding, abetting, counselling, or procuring the commission of one of the above offences. So that's adds the layer of complexity, where you're looking at, actually, this may not be an offence committed by that individual, by that associated person, but they were actually aiding or abetting somebody else. But you've got to have this base fraud offence to be established. So even if the associated person is prosecuted for an alternative offence, or is not prosecuted at all, if they did commit, on the face of it, this base fraud offence, then there could be a prosecution for failure to prevent. If that associated person has been convicted of the base fraud offence, then this can be used as evidence against the business in proceedings for failure to prevent. If the associated person is not prosecuted, however, the prosecution must prove to a criminal standard. So we're not talking about balance of probabilities here, we're talking about criminal standard, that the associated person did commit the base fraud offence before there can be a conviction for failure to prevent. So there's a few hurdles there, but fundamentally, there must be that base offence. And if there ever was to be us advising you in relation to whether or not you could how you deal with the prosecution, then we would also be looking at what that base fraud offence was, and what evidence there was to support that. Looking quickly at the benefit, this is explicitly financial or non-financial, and direct or indirect. So we'll be talking today in the case studies about examples which absolutely are not financial directly, but they result in perhaps winning a contract, enhancing reputation, gaining a regulatory approval, which undeniably as a business has a benefit. Any kind of favourable treatment can be seen as the benefit that is what you are obtaining through fraud. The intention to benefit is sufficient. It may not have actually been that you actually got that benefit, but the fact that you were intending to benefit can amount to the fraud, and therefore the offence is open. Moving then to my final slide, what is the outcome here? There's a lot of talk about whether or not this legislation will actually be used. I personally think, and I think a lot of commentators do on the point, this is not just going to be like the Bribery Act. This isn't going to be something that sits fairly unused on the statute books. The SFO has made comments about wanting to take this forward and use it. And so we have to be alive to the fact there are going to be people who are fined. Comparing public sector to private sector, maybe there might be reasons why you would expect a lower propensity to seek to penalise heavily in the public sector. But nonetheless, the courts are going to have to grapple with this. We can only look currently at the Sentencing Council's guidelines overarching principles. There's no specific principles as yet adopted for this offence, but the courts will take account of all of the circumstances in deciding the appropriate level of fine for a particular case. On the face of it, an unlimited fine, but as with any criminal action, any criminal proceedings, there's going to be an assessment of the seriousness, level of harm, financial position, and ability to pay. And aggravating and mitigating factors will be things like whether or not there has been a deliberate cover-up, a complete failure to avoid this occurring, and obviously we'll come on in a moment to the defence and how you go about that. There's always going to be a balance of aggravating and mitigating factors, but you only have to look back at how there have been very significant fines in relation to bribery, for example, obviously in the millions. But you would be expecting a significant financial penalty to potentially be on the cards, and something that you obviously don't want to end up having to consider. There has been talk about the SFO talking about how they're going to use their powers and how they're more likely perhaps now to use deferred prosecution agreements, and we might come on to that in the Q&A. But you have to treat this as it could be a very substantial fine. There are, of course, almost as importantly, collateral consequences, potential civil claims, and crucially, reputational damage, regulatory scrutiny following up from any number of regulators that we deal with on a regular basis. But that's something which must be borne in mind, and is almost as significant as the fines that are likely to be meted out. So that's my sort of overview there. I haven't gone into too much detail, but I think it's worth thinking about a few areas there. And I'm now going to hand over to my colleague Rachel Orgill-Harris.
Thank you, Matthew, and good morning, everyone. So I'm going to talk a little bit now about the one defence that is available to the offence that Matthew has just outlined. So in the event of a prosecution, an organisation has a defence if it can demonstrate to the court that it had reasonable fraud prevention measures in place at the time that the fraud was committed. The onus will be on the organisation to prove that the measures in place were reasonable. the whole idea of this offence is sort of intended to encourage organisations to build an anti-fraud culture, in the same way, really, to the failure to prevent bribery legislation that was introduced back in 2010 and has helped sort of reshape corporate culture around bribery. So in terms of what reasonable fraud prevention measures are, the government released guidance on this in November last year, and they identified 6 key principles around reasonable procedures. I'm going to consider those in turn briefly before going into a bit more detail about what practically organisations can do now to prepare for this offence coming into force on the 1st of September. So just dealing briefly with the first 2, because I'm going to come into a bit more detail on those. So top level commitment. So obviously responsibility for the prevention and detection of fraud rests with those charged with the governance of an organisation. And so that's going to include executive teams, senior management and board trustees, for example, depending on what type of organisation you are. And as I say, I'll talk about that in some more detail in a moment. Risk assessment. So this obviously assesses the nature and extent of your exposure to the risk of this offence, so to employees, agents or other associated persons committing fraud within the scope of the offence. Proportionate risk-based prevention procedures. So these are procedures that you put in place or may already have to prevent fraud, and they should be proportionate to the fraud risks that you face and to the nature, scale and complexity of your organisation's activities. And that would obviously be guided by the risk assessment. Due diligence. So this is sort of due diligence procedures, again, taking a proportionate and risk-based approach on this. In respect of persons who perform or will perform services on behalf of the organisation. This can include things like doing sort of pre-employment vetting checks, using third-party risk management tools, for example. Communication. So this is a really important one. So you need to ensure that your prevention policies and procedures are communicated, that they are embedded throughout the organisation and that they're understood as well. Key to that is obviously going to be training staff and maintaining training as well. And then finally, monitoring and review. So it's absolutely not enough just to put these sort of procedures in place and leave them. They need to be regularly monitored. To review your fraud detection policies and your prevention procedures and make any improvements where necessary. And that can include learning from investigations, whistleblowing incidents, for example, and also reviewing information from your own sector too. Okay, so moving on now to some of the more sort of practical things that you can think about doing in order to prepare for this offence. So first of all, assemble a multidisciplinary team. So key to that is obviously going to be, as we said, the executive team and any senior or operational staff who would be involved. Also board trustees. It's really important to get that sort of top level commitment to kind of, change if necessary or embed that culture within the organisation. You should make sure that there is clear governance across the organisation in respect of the fraud prevention framework. So you'll want to designate responsibility for things like horizon scanning for new fraud risks, for example, who approves the assessment of risk, obviously developing these fraud detection measures, and also thinking as well about who is responsible for dealing with potential reports of fraud under this offence. It is essential as well to kind of make sure that you can maintain governance when members of staff move to other positions, for example, or leave the organisation, so you don't have any gaps. You may, of course, want to take external advice as well from lawyers and or auditors. As lawyers, we obviously can advise on the legal aspects of it and can assist with developing policies and procedures as well. Get board buy-in is something that I've said here as well. So really important that the board understands their responsibilities around this. Important for all sort of sectors, but obviously particularly important for housing associations, I'd say, given that obviously the sector risk profile did note, the most recent sector risk profile did note fraud. So this is something that the regulator is looking at. Okay, so conduct risk assessments. So this it is really important, probably the most important thing to do, and the place that I advise people to start if they're unsure where to start. You probably already undertake a range of risk assessments, including a sort of general risk assessment and maybe risk assessments relating to anti-money laundering or other economic crime if you fall within the scope of various laws. I think the first thing I'd say about this is you don't have to have a completely separate risk assessment in relation to this offence. You may just want to extend your existing risk assessment around economic crime or your existing fraud risk assessment to just include frauds within the scope of this offence. It's difficult to know kind of where to start with these risk assessments. So I think what I'd probably say is that because the definition of associated person, which Matthew described earlier, is so wide, you might want to start by thinking about different typologies of associated persons. So, for example, agents, contractors, providing a particular service, or perhaps staff in specific sort of sensitive roles. And then I think using those typologies, you can sort of consider a wide range of circumstances under which those persons could potentially attempt to fraud within the scope of this offence. So you'd need to think about sort of opportunity and motive, for example, so which departments or roles potentially have the greatest opportunity to commit a fraud within the scope of this offence. It could be, your finance team, for example, procurement. Do some of your agents operate with minimal oversight, which could make the fraud risk greater? These are all things that you'd need to think about when conducting the risk assessment. I think the final thing I'd say about the risk assessment is that it's obviously a dynamic document. It should be kept under review. There's no specific sort of timings for review in the guidance, but I think we'd recommend generally that it should be every 2 years as a minimum, or when there's a sort of particular change to the business or any activities you undertake. So next, we would suggest that you evaluate your existing policies and do a sort of gap analysis. And as I mentioned before, this is where you may want to consider using sort of external assistance. So to avoid duplication of work, organisations have basically been advised to assess whether their existing regulatory compliance mechanisms or financial reporting controls, etc., are sufficient to prevent each of the fraud risks that you identify in your risk assessment. And it might be that in a lot of cases they are, but if not, or they look insufficient in any way, you should basically be developing appropriate measures to prevent those risks. So I'd suggest looking at your existing fraud, anti-money laundering, bribery and corruption policies, looking at your financial approvals and your whistleblowing policies as well. What you might find is that a number of these procedures look at external fraud, maybe in quite a lot of detail, but perhaps don't consider internal fraud by staff or sort of agents, suppliers, etc., in quite as much detail. I mentioned earlier about sort of assessing opportunity and motive. So when you're looking at policies and procedures, you need to sort of look back at that and then think about how you can reduce both of those things through these policies and procedures that you're going to put in place. That's going to look different for different organisations, obviously, but it could include things like undertaking pre-employment and vetting checks if you don't do that already. Obviously, having a sort of training programme, making sure staff, particularly sort of relevant staff, receive regular anti-fraud training. If you are carrying out new services or new associated persons present, potential fraud risk, is a fraud impact assessment made. It's just looking as a whole at those policies and procedures across the organisation to ensure that you're sort of plugging any gaps. And then I've also said here, it might be useful to review historic data on fraud cases within the organisation. You can probably learn quite a lot from that, again, which can feed into the risk assessment and then into the policies and procedures. Benchmarking against others in the sector, that's obviously difficult to do at the moment, but in a few years, that kind of information may be more widely available. And then finally, develop policies and procedures and document the decision making. So this is really, really crucial. It might be that you decide that it isn't reasonable to put in place a particular policy or procedure, and that may be the right decision. But what you have to do is document why you think that's the right decision, because in a prosecution scenario, as I say, it could be acceptable that it's, it wouldn't have been reasonable to do that, but what's very unlikely to be reasonable would be to have not considered it. So really essential to document your decision making in relation to all of this. And I'm going to pass over now to go through a few case studies on the point before we go to the Q&A. Thank you.
Thank you, Rachel. Hi, I'm Peter from the forensic team here at Forvis Mazars, and together with my colleague Katie, we want to take you through some practical examples of where public and social sector bodies might be held liable under the new offence that we've been outlining so far, because we want to add some flesh to the bones of the new offence and demonstrate in a more practical way where issues could arise. We're going to go through 4 examples here today. So here in the first example, we've got a hypothetical charity where gift aid fraud is committed. So in this scenario, a fundraising assistant manager fraudulently produces some gift aid forms, some fake gift aid forms to accompany cash donations at some events that they have been managing. So on these forms, they forged some signatures and added some names and addresses of colleagues, friends, and family to add credibility to the gift aid forms. And the charity uses these to claim additional funds back from HMRC. And these forms are submitted personally by the assistant manager to HMRC as part of their job role without any oversight on the forms themselves. So having done this, this increases the total amount raised for the charity, and also the assistant manager, their performance may appear improved. And this can improve their reputation internally, possibly used to secure a promotion or meet performance targets. So while the charity benefits from the funds that have been claimed from HMRC, this example underscores the need for robust fraud prevention strategies. The charity could be charged under the new offence for this gift aid fraud, as there was no segregation of duties, and the assistant manager was able to operate autonomously, collecting the cash, forging the forms, and submitting the documents, and then the charity able to reclaim the funds. So this highlights the importance of having adequate measures in place, such as scrutinising the forms produced, some sort of verification on the signatures and the amounts, maintaining proper record keeping and communication. And in this instance, there may not have been a risk assessment conducted by the charity for some time, and this area may not have been identified as a place where further procedures should have been implemented. And also, as we consider the charity sector more broadly, there's some other high-risk areas of fraud in general that we'd like to touch upon. So grant applications, where false information could be submitted to secure additional funding to benefit the charity. Procurement, I think we'll touch on this in all areas, but procurement is always an area across all sectors of the economy where fraud can occur. Cash donations can be an area that charities could be at a high risk. And then also there's commission-based fundraising, where these commission-based fundraising organisations could be considered associated persons, depending on the relationship with the charity, and the individuals working for these commission-based fundraising agencies could commit fraud to inflate their performance, earn high commissions, other unethical behaviours. I think they've been widely covered in various news stories recently. So each of these areas, as well as the gift aid area, require vigilant oversight and strong internal controls. So I'll hand over to my colleague Katie to run through the second example that we have here.
Thanks, Peter. Good morning, everyone. So the second example that we're going to run through is in relation to a local council, so local government. And as Pete mentioned, we're looking at procurement fraud here. So in this scenario, an employee in the procurement department has manipulated the procurement process by sharing bidding figures with competing companies in order to encourage lower bids and to favour a specific construction company to lead the regeneration project of an existing housing estate. So this manipulation results in personal benefits again for the employee, potentially such as gifts and other incentives from the supplier, as well as improved performance against set budgets and for the project completion as well. It also would potentially achieve value for money for the council, which would be the benefit that we would be seeing there. However, the reality is that this process has been abused by this employee to commit fraud for a potential personal gain, albeit not necessarily financial. The employee's actions compromise the integrity of the procurement process, can lead to potential financial losses, the risk of substandard work from contractors, and potential reputational damage for the council. The council could be held liable for failing to prevent fraud, as it did not have robust procurement policies and procedures in place. They may not have conducted regular audits on their contracts with suppliers, and it appears that there was not a transparent bidding process in place. Some other high-risk areas for local councils may include the mismanagement of public funds, so where we're allocating funds for public projects and the funds could be diverted or misused, leading to, again, financial losses and reduced public trust. Fraudulent claims for grants, which I think grants, again, is quite common in the public sector for being at risk here. Employees may submit false claims to secure additional funding for their organisation. And then corruption in planning and development approvals is also a potentially high risk for local councils to consider. And this might be where officials accept bribes to approve planning applications and development projects, compromising the integrity of the council's decision-making processes. I'm now going to hand back over to Peter, who's going to go through an example in relation to the education sector.
Thank you, Katie. So yes, our third example here, as Katie mentioned, is within the education sector, specifically considering, a hypothetical university. So in this scenario here, a senior academic leading a high-profile research project is aiming to develop some new treatments for a chronic condition. And whilst doing this, they've been falsifying some of the research data, the outputs from their experiments to show exaggerated positive results. And this research has been grant funded, and they want to, with the positive results, achieve more grant funding to continue the work that they're passionate about and they're enjoying. And also some of the grant funds received initially have been misused for personal gain by the research academic, including using some of it for expenditure on personal expenses. So the perceived benefit for the university itself could be the increased funding for this particular research department, enhanced reputation due to the positive results, which could potentially be newsworthy or at least important in academic circles. And if the amount of funds is large enough, the university could develop a specialist sub-department and become a leader in that particular field. However, the reality is that the researchers' actions falsifying data compromise the integrity of the research. This could lead to legal action, reputational damage, and maybe even financial penalties further down the line. However, for the time being, there has been a benefit to the university. The university could be held liable under the new failure to prevent fraud offence if it did not have rigorous prevention procedures, regular audits of grant funds and their usage, and more proper training for researchers on ethical practices. Without these measures, the university may be held liable under the failure to prevent fraud offence if the policies they had in place are not deemed to be reasonable. The university in this instance, hasn't established an effective grant funding reconciliation progress with no scrutiny over the usage of funds or the results the results of work that are shared. They simply record the funds received and spent rather than properly scrutinising them. When we consider the education sector or university sector more broadly, other key areas that are risk of fraud, and also specifically frauds that benefit the organisations, could be mismanagement of student fees and funds. There might be some misuse or embezzlement there, but there also might be fraudulent admission practices, where employees might accept bribes or falsify records to admit unqualified students. I think there was some recent news coverage of this happening. I can't remember exactly which university it was, but I think people were falsifying their English language certificates in order to gain access to the student loan facilities. But then at the same time, university would benefit because of the increased funding for the courses that these fraudulent applications have been for. Also, there may be corruption in the procurement of educational services where subcontractors or other third parties are used, with officials possibly getting kickbacks from vendors or accepting inflated costs or reduced quality of services. I'm going to hand back to my colleague Katie for a final example.
Thanks, Peter. So the last example that we're going to run through is in relation to housing associations or registered providers, and one of the higher risk areas for them, which would be repairs and maintenance. So this particular scenario is looking at where services are being delivered potentially on behalf of an organisation. A member of the repairs and maintenance team has manipulated the voids process to continuously award work to their former business partner via a potential service agreement. On the surface, the housing association is satisfied. The business partner's company is extremely responsive, the quality of their work is high, and the voids turnaround times have dropped dramatically in recent months. They're delivering the service that they've been contracted to deliver, although it may not have been the best option for value for money purposes. The benefit of the housing association is the significant improvement in its key performance indicator of average void turnaround times, which ultimately leaves a good impression on the board of the organisation. However, the reality is that the process was abused to commit fraud by that member of the repairs and maintenance team for potential personal gain, and that personal relationship that was there. This could then therefore be detrimental to the housing association in many ways, again, including financial losses and reputational damage. The housing association could be liable for failing to prevent fraud, for not having effective measures to prevent fraud in their procurement process or management of their maintenance contracts and services. The effective measures that could have been in place might have included sufficient segregation of duties, lowering approval thresholds, and increasing scrutiny on approvals for both individuals' decision-making and amounts spent in aggregate with suppliers. Some other high-risk areas which you'll see a common trend and theme here is grant funding applications. So again, where false information can be submitted to secure funding. Tenancy eligibility, so where fraudulent practices might be used to approve ineligible tenants. And then holiday or short-term lets is a potential area of high risk, so where properties could be misused or rented out without proper oversight. And that concludes our case studies and our examples that we've tried to create in a way that makes it more relevant for you that are here today and your organisations to really start thinking about how this offence applies to you and the scenarios within your organisation. So hopefully you found the information that the four of us have presented this morning informative and thought-provoking. I can see that we've already got a number of questions in our Q&A chat box. So I'll move us now onto our Q&A section of the webinar. So please do continue to pop your questions in the Q&A box. We're going to try and get through as many as possible. Any that we don't answer, we will be sure to include in our FAQs that are circulated after the webinar with the recording. And I think our first question is going to be for Devonshires, and it was one that was received as part of the registration sign up by a few people. So Devonshires, I'll put the question to you, which is, what are the effects or the impacts of the Crime and Policing Bill on the failure to prevent fraud offence?
Thanks, Katie. Yeah, this question did come up a few times, didn't it? And I think it's got a lot of people thinking there's a couple of provisions in there that might have an effect. The important thing to remember is this is just a bill. I checked again last night, it's still in the early phases. It's still in the committee stage, first committee stage in the House of Commons. There's going to be changes. But at the moment, it includes an awful lot of really important things outside the scope of financial crime. But perhaps where people are picking up on this is section 130 of the bill, or clause 130. Which what it does is drafted currently. It means that a senior manager committing any criminal offence while acting within the scope of their actual parental authority, in those circumstances, the organisation can be held criminally liable. Now, this doesn't really go so much to the failure to prevent. What it does is it touches on another section of ECTA, which is section 196. And what that does, sort of working backwards, is that means that effectively, if any senior manager commits an economic offence within the actual or apparent scope of their authority, then the organisation can be held liable, would be found guilty of the offence. And what that in turn had built on was this old common law approach of the identification doctrine, which was discovering who was within a business, who was the directing mind and will of the company. And that was always quite a difficult thing to do. And what ECTA sought to do was say, well, senior managers, if they commit an economic offence within the scope of what they're doing in the business, then the business is liable. So if this act goes through, the crime and policing bill, then there will be a widening of that to any criminal offence. But as I say, it's early days at the moment in relation to that bill.
Yeah, I think, and thank you, Matthew. I think the other thing to mention is that this proposed offence would apply obviously to all businesses as well, not just small businesses. And there is no defence of reasonable procedures in the way that there is for the failure to prevent fraud as well.
Thank you both. And I think, Matthew, you touched on this during your part of the webinar, but I think it's good to go back to this. What is the likelihood of prosecution under this offence for public sector organisations? And in particular, you mentioned the sentencing guidelines and the potential penalties. Are there any things in particular within the sentencing guidelines that are relevant for those here today?
I mean, it's very hard to say because the guidelines are so broad. The underlying guidelines which deal with any offence are the ones that would be attached. There is going to be further guidance to follow, which may give some indication. We've obviously seen guidance from sort of November last year. There is going to be more coming. I don't know whether we are going to get any specific guidance this side of the beginning of this offence on 1st of September. But I think the important point to make really is that the SFO has repeatedly through various statements and initiatives this year made it clear that this isn't going to be treated like a bribery type offence. It is going to be actively pursued. Only the other day, the SFO issued some new guidance on deferred prosecution agreements and how really they are seeking early disclosures, self-whistleblowing, self-reporting in order to get the benefit of those deferred prosecution agreements. And the indication has been that they are going to actively seek to use this to investigate and use this new offence. So the two put together, the fact that they're pushing DPAs, the fact that they are saying they are actively going to go out there and investigate, just tells me that this is something which you cannot, as a public body, say is not going to be used. There are, of course, other options where there may be a preference not to prosecute, but ultimately the full code test is what the SFO will use, and that is the test used for whether or not any criminal proceedings are brought. It's an evidential test on one side. Is there enough evidence to get a reasonable chance of a prosecution? And then on the other side is public interest. Public interest no longer, if ever, has dictated that public bodies are not pursued. And there's whilst there are other options like investigations by the NAO or regulators taking a view, or even ministerial sort of intervention or ombudsman, there are these other options. But the view seems to be from the SFO, it's a new tool, we are going to use it. And whilst deferred prosecution agreements are a whole nother issue to discuss whether they're good or bad or whether you want to engage in something very early on, they are pushing for people to come forward, for businesses to come forward, declare that there have been issues. So really, as Rachel said, everyone needs to be prepared, do those risk assessments so you have that defence.
Great, thank you, Matthew. And just to give Devonshires a little bit of a break from a legal point now, we'll move over to a question that's a bit more about what can be done now and what can be put in place now to protect organisations or to have this defence. And this was a question that we received ahead of the webinar as well. So I'll go to Peter for this. What measures will local authorities have to put in place to protect themselves against being liable for the new offences, both corporately and for individuals as well?
Yeah, I think I'm going to be sort of emphasising some of the stuff that was covered by Rachel earlier in the webinar, but I think it's first it's important to note the guidance says that everything should be risk-based and proportionate. So there's not a one-size-fits-all approach that's going to work for every single person, every single organisation, sorry, but reasonable is a principle, which is going to mean different things in different contexts in your different organisations. But if there's one thing to emphasise, it's that the guidance published last year in November. It's quite clear in one area that really organisations should, at a minimum, be conducting a fraud risk assessment. And this, like Rachel was saying earlier, is the starting point that can really inform the rest of your fraud prevention framework. And I think as well, it's worthwhile to note that the Public Sector Fraud Authority is starting to produce some really good guidance documentation and file notes on some of these areas and some really practical ways to help organisations build these out. And one in particular, they shared a practice note on building a counter fraud strategy at the start of March this year that I'd recommend everyone on this call having a little read of.
Thanks, Peter. So another question, and I think we have already touched on this as part of our content already, is in regard to identification of associated persons. I'm also mindful of another question that we've received around local authorities having many partners and what the responsibility is and the practical solution to ensuring that our third parties, agencies and partners have in place reasonable fraud prevention controls, for instance, in line with the 6 principles. I'm happy to take a start on that one, and then if anyone wants to add to anything I say, then please feel free. So I think the first part of identification of associated persons we covered slightly, but some more kind of practical tips on how you might look to do that within your risk assessment is reviewing of contracts and service agreements that are in place. What we want to be doing is identifying the contractual parties, analysing the roles and responsibilities, and checking what authorities have been given to those parties. And as part of that, it may be identified that potentially there's some improvements that can be made to subcontracting clauses and clauses within contracts that local authorities or other public sector organisations can implement within their contracts with their third parties that states that they should have reasonable fraud prevention procedures in place, or they're agreeing to it. It can also form part of the procurement and tendering process as well, as a requirement when you are kind of procuring those services. I think one of the other things that I'm not sure many organisations have take full advantage of is the use of KPIs and third-party contract audits within their contracts. So making your subcontractors, your third parties, your agents agree to the fact that you can independently audit what they've been doing as such, and keeping an eye on whether or not they're meeting their KPIs, meeting the stipulated clauses of their contracts. And this is not only a benefit from a fraud perspective, but also from a potential cost leakage perspective as well. I'm not sure if anyone else had anything to add to that. Otherwise, I'll move on if it's quiet.
Yeah, no, I think just to say, Katie, that I would completely agree with that. I think it's a case largely of reviewing existing contracts and new contracts going forward to make sure that you have those sort of responsibilities in place for contractors and suppliers and things, in the same way that those with sort of undertaking activities within the scope of money laundering regulations would have to do already. Yeah, and I think the other thing to mention as well is that some may look to include sort of termination clauses in those contracts as well, where there are failures to meet those sort of standards, and that's another thing to consider.
I think that's a really key point. Coming at it from sort of litigation angle, I wouldn't want to see that you have a contract with a load of powers in that you never use. That's the thing. If you're not monitoring contracts, not only is that bad, full stop for your business, but you're almost sort of turning a blind eye to bad practices. And if you know things are going on despite what the contract says, that's what you're going to have to answer to. If you're copied into communications or you see material that clearly is of concern, you need to be showing that you're identifying that, you're dealing with it through the risk assessments, but you're also actually actioning, working out what is going on and whether there is a fraud there.
Thanks both. So our next question is maybe one more for Matthew and Rachel around the failure to prevent fraud, the date of implementation, and there's a question as to whether or not it applies to frauds that occur after 1 September 2025, or will it apply to frauds prior to that are identified after 1 September 2025?
So on this point, the Act, there's no evidence in it that it is retrospective or intended to be retrospective. There is some confusion, I think, in the wording of Section 199, subsection 1, which refers to the offence, the actions happening in a financial year of the body, which is then defined within that as the year of the fraud offence. And I think the only reason it's been done in this way is because, as we spoke about earlier, it is a sort of threshold offence. If you're not a large organisation, you are not going to be able to commit that offence. So the wording of it, curiously and a bit probably unnecessarily, in my view, is that it's in the year of the financial year of the body. So then it would suggest that there may be, obviously after the 1st of September, there may be different outcomes for different businesses simply because financial years will be different. So there may be two businesses which are identical, but over the course of that financial year, are they a large organisation or not? They may be, just because you may be at the cusp of moving between one and the other. And conceivably, you could have two businesses that are in all ways identical, except for the fact that one's moving out and one's coming into that boundary. So I think fundamentally, it's going to vary from time to time as you move in and out of the boundary if you are on the cusp of being a large organisation. But there is no anticipated retrospective effect on this before 1st of September.
Thanks, Matthew. And just whilst we talk about large organisations, there's a question in the Q&A that's just out of interest. Do we have a view as to why the legislation is targeted at large organisations? In theory, there are particular risks for fraud in smaller organisations who may not have the layers of control, etc. Why have these not been brought into scope?
Yeah, so I think they've said that the idea was basically not to apply an unnecessary burden on SMEs and to kind of support economic growth. So I think in the same way as the sort of bribery offences for now, it's certainly just on larger organisations. But yeah, I think, as I say, it's really to do with placing burdens on smaller companies and things.
Yeah, I think, as you say there, Rachel, it's for now.
Yes.
We don't know. We've seen with things like the economic crime levy and how that
Yeah.
might change over time, people slipping into different brackets.
Absolutely.
Yeah.
Thanks both. There's a question here about shedding light on the emergency scenario that the guidance note refers to with regards to risk assessments. I'm happy to take a start on that one. I think what the guidance note is referring to here is in regard to business continuity. So if say, for example, there was a huge cyber attack that meant that your finance systems had to be taken offline for a certain period of time, that obviously creates a higher risk of potential insider fraud, which could then fall into the category of the failing to prevent fraud offence. And I think what the guidance is suggesting here is that within your risk assessment, you have considered the possibility of these scenarios, the likelihood, the impact, and the controls that are in place should this happen, that would mitigate any risk of that fraud. And that's what the guidance is wanting or suggesting that there should be in place and what they want to see. Not sure if anyone else has anything else to add to that, or whether or not there's additional things to be considering as well from an emergency perspective.
Yeah, I mean, the only thing this really shouted at me was COVID. And I hate to be the person always to mention that in meetings, but that's where I think some of this thinking is, that obviously procurement at emergency times where could be public bodies who need to do things urgently. And what it's telling us here is that when you're doing that risk assessment, you can't ignore expected, ultimately over a course of time, things like COVID will happen, emergencies will happen, whether it is a cyber attack or a sort of more a wider issue, and you have to be ready to take steps that are going to control if you're buying things urgently or taking in services urgently, you anticipate that. So it's about forward thinking in your risk assessment there.
Thank you. And then Peter, I'm going to come to you with the next one. This is, can someone be individually held accountable if they don't receive board buy-in when it comes to the implementation of reasonable procedures?
Oh, okay, that's quite an interesting one. But I think the real, again, I sort of refer back to Rachel a little bit, but there really has to be this top level commitment from an organisation. So I think, if considering an individual, imagine this might be somebody asking from the perspective of being, like a fraud risk manager or chief risk officer, possibly an organisation, who maybe feels a little bit stranded in terms of getting resourced for conducting fraud risk assessments or implementing other counter fraud procedures. But this has to be a top level buy-in. This person, advise them to communicate as much as possible with the people above them or people holding the purse strings or allocating resource. But they personally won't be held liable for this. It's got to be something that the organisation as a whole takes seriously, and it'll be the organisation that will be liable ultimately.
Thanks, Peter. And yeah, just to add to that, yeah, as you say, the offence doesn't extend to individual liability for persons within the organisations, save for, of course, the individual who committed the base fraud. This offence does sit alongside, existing, fraud offences, obviously. Yeah, so yeah, no extension to individual liability if you didn't get board buy-in, though.
Thank you both. I'm just conscious of time. I think we've probably got time for one more question. So the question is, do you expect there to be a trickle-down effect on other regulations, bids, tenders, contract requirements that could be applicable to organisations that don't currently meet the criteria based on their size? I'm happy to open that to the floor, or I can take that if you'd like.
I would just say on that I think although there is this large organisation threshold, it is good practice, as Rachel and I are always advising in relation to, say, the AML sphere. It's good practice to imagine you are regulated, or to imagine that you are subject to something that you may be in the future, but are not currently, or within a regulatory sort of field, where the part of your business is and part of your business isn't. It's always best to adopt the higher standard. So I can certainly see that, especially those contracting and wanting to ensure that they are contracting with are taking those same steps. It would make sense, and I can see that happening certainly.
Yeah, I think I'll echo exactly what you just said, Matthew. I was going to say the same. I think we could definitely see that trickle down effect, and where the organisations that are meeting the criteria are starting to implement those things within their contract requirements, bids, tenders, etc. It therefore becomes a requirement of those smaller organisations. But as you said, it is, I think, best practice, and that's what I think the offence is hoping to encourage across the board, is having that best practice fraud prevention framework in place. Okay, so I think I'm going to have to say that's all we've got time for this morning. I'm sorry that we couldn't get around to answering all of your questions. However, as I said before, we will look to respond to all questions we've received as part of our Q&A, and these will be circulated as part of our FAQs when we send out the recording of this webinar shortly after. When we do send out the webinar, please do share the recording with your colleagues if they haven't been able to attend this morning. And hopefully on the screen now, you might want to do a quick screenshot of our contact details. So if anyone has anything that they'd like to reach out to us personally about and speak to us about directly, feel free to. Our details are there. And I'd just like to say, enjoy the rest of your day and thank you very much for attending and listening this morning.